What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Ethereum and crypto in general. We're going to go very in-depth on the reasons why we sold our cryptocurrency holdings yesterday. We did touch on that in yesterday's Bitcoin video, so go check that out. So starting off, Vanguard is preventing all the Bitcoin ETFs from being listed on their exchange. Quoting a spokesperson from Vanguard, "We also have no plans to offer Vanguard Bitcoin ETFs or other crypto-related products. Our perspective is longstanding that cryptocurrency's high volatility runs counter to our goal of helping investors generate positive real returns over the long term." Now, let me explain why that statement is absolute bullshit. On this channel, we have measured volatility using the Volatility Expansion Index and Fibonacci rings. Another method to measure volatility is by calculating a stock's beta value. The beta value of a stock is a ratio that measures the risk or volatility of a company's share price in comparison to the market as a whole. A beta value of 1 means that the company rises and falls in direct relationship to the overall market. A beta value greater than 1 indicates that the stock is more volatile than the overall market. As you can see, you can purchase Coinbase, Mara, Riot, and CleanSpark stock on Vanguard. All 4 of these stocks are crypto stocks that have a beta value greater than 1. So let me get this straight. Vanguard is preventing their customers from purchasing Bitcoin ETFs because of high volatility, but allow their customers to buy crypto stocks like Mara, which has a beta value at 5.23, indicating that Mara stock is 5.23 times more volatile than the overall market. On top of that, take a look at the Volatility Expansion Index screenshot on Coinbase stock. For those of you that are new, the Volatility Expansion Index ranges from 0% to 100%. The current volatility reading on Coinbase stock is at 90%, which is an extremely high volatility reading. It makes absolutely no sense why Vanguard is preventing their customers access to Bitcoin ETFs, but allow their customers to purchase high volatility crypto stocks. Moving into the charts, we'll start with Tether dominance. Just a quick recap: when Tether dominance goes up, Bitcoin goes down, and when Tether dominance goes down, Bitcoin goes up. For the past few weeks, we've been saying how Tether dominance is due for some upside because Tether dominance is trading inside our white trend-based fib extension support area. On top of that, Tether dominance yesterday did tag our white demand trend line as well as the critical support level at 5.24%. The reason why 5.24% is a critical support level is because the 5.24% level was a previous pivot in past market cycles. Now, if we zoom in, we can see that yesterday, Tether dominance did hit our critical support level at 5.24% to a T. As stated for a few weeks now, we do favor upside on Tether dominance, which means that we anticipate a correction is coming to the crypto markets, which is why we sold. Next up, Coinbase stock. Yeah, Coinbase looks like shit. We've been warning about Coinbase stock dropping for a few weeks now. Bearish gravestone doji plus bearish evening star pattern under the red 61.8% Fibonacci retracement. On top of that, we have a 9-count sell signal on the weekly time frame that worked out to a T. More coverage on Coinbase stock tomorrow. Up next is Michael Saylor's MicroStrategy. Looks like shit. Bearish engulfing candle on the 2-week time frame, once again under the red 61.8% Fibonacci retracement. On top of that, this stock is dumping on high volume. Never in MicroStrategy's history has there been over 19.5 million shares traded in one 2-week candle until today. Next up is Mara, the king of Bitcoin mining stocks. Same story with MicroStrategy. Mara is dumping on very high volume, back under the red 61.8% Fibonacci retracement. On top of that, Mara did get rejected by the rising wedge trend lines as well. If you're still holding onto crypto stocks, I dump. Next up is BITI, which is the Bitcoin short ETF. BITI is pumping on very high volume. 5-wave impulse looks to be completed, bottoming at our white trend-based fib extension support area, very similar to Tether dominance. BITI also has a weekly bullish hammer as well. BITI looks pretty bullish. Okay, finally moving into Ethereum. Even if the pre-halving Bitcoin correction we discussed in yesterday's video does take place, we don't believe new bear market lows are coming for Ethereum. Our long-term price target on Ethereum remains unchanged at $14,000. This week, very similar to the Coinbase and Bitcoin episode, we're changing the medium-term price target on Ethereum down to $1,766. Ethereum, very similar to the crypto stocks, is trading right under the red 61.8% Fibonacci retracement, but so far, the bulls are holding strong. Now, as explained in yesterday's video, we're not perfect. Like I said, we didn't get out at $60,000 and $69,000 in the last market cycle. We're not perfect. We make mistakes. Now, that being said, our Bitcoin sell yesterday is looking pretty good as Bitcoin has crashed $5,000 since we sold. Ethereum, on the other hand, hasn't moved much. Even though Bitcoin and crypto stocks look like crap, Ethereum is still holding strong. So I'm not confident that Ethereum will make it back down to $1,766. How I came up with this number is quite simple. Ethereum made a bear market bottom at the 0.382 Fibonacci retracement, which is the most bullish Fibonacci ratio. Applying the same Fibonacci retracement, there we go. That's where the $1,766 price target comes from, which is very close to the 200 weekly moving average in red. So that's some interesting confluence right there. As stated a few minutes ago, if you're still holding, I would sell Bitcoin and crypto stocks, but for Ethereum, I would just take some profits or diamond hand your Ethereum. I honestly might have to buy back higher, but that remains to be seen. Shifting gears to the Ethereum against Bitcoin valuation, finally, the Ethereum against Bitcoin valuation has pumped. We've been talking about Ethereum eventually outperforming Bitcoin, and we're finally starting to see that happen. So just as we discussed in previous videos, the Ethereum against Bitcoin valuation has reclaimed both the white 1.618 trend-based fib extension and the 200 weekly moving average in red. Currently, the Ethereum against Bitcoin valuation is tagging the white supply trend line of the falling wedge. This is going to absolutely rip it to the upside. Additionally, we have bullish divergence on the weekly RSI, where price is making a lower low, but the indicator is printing a higher low. This is bullish for the Ethereum against Bitcoin valuation. Now let's get into why this chart is important. Okay, so the Ethereum against Bitcoin valuation is in blue and the Bitcoin is in orange. Now, I'm not sure why a lot of the big crypto YouTubers believe that there is always a positive correlation between the Ethereum against Bitcoin valuation and Bitcoin. There are times where both charts converge and move in the same direction, but as you can see, there have been times like in May of 2021, which is the line marked in yellow, where both charts have moved in opposite directions. In May of 2021, when the Ethereum against Bitcoin valuation pumped, Bitcoin ended up crashing from $65,000 to $30,000. Now take a look at what happened ever since June of 2022, which is the line marked in dark blue. Notice how Bitcoin made a new bear market low, and the Ethereum against Bitcoin valuation almost made a new bull market high. Now, since then, both charts have continued to move in opposite directions, and this is where things get interesting. Because both charts are currently moving in opposite directions, if the Ethereum against Bitcoin valuation continues to surge, this means Bitcoin will reverse to the downside. And so far this week, this divergence between both charts has played out. The Ethereum against Bitcoin valuation has pumped nearly 30%, and Bitcoin has crashed $8,000 over the past 48 hours. This is further evidence of the pre-halving crypto correction we discussed in yesterday's video. Okay, so that's my analysis on Ethereum for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.